good afternoon, good evening, and good night, guys, and welcome to the Trading Easy mini-series, a series where I dive deep into the world of trading to find out why 95% of traders fail and only 5% of traders are successful and consistently profitable. Now, you might know these statistics as 75%, but I'm here to inform you that the 20% within that statistic break even or are in the boom and bust cycle. Now, today I want to talk about some psychology and also the Dunning Kruger effect. This was recently mentioned by a very good friend of mine who brought it to my attention, and I thought I'd share it with everybody. Now, you can see the chart on the wall behind me, and basically it is like similar to a trading chart when we trade a cup and handle chart, and it's basically weighing competence and confidence. So what I'll do, I will put it on the screen, but for anybody listening on the podcast, it's basically a U-shaped chart with confidence going up and competence going down the side. I think it's the X, Y. I can't remember what I learned in school. So when you first start something and you first do it, you have what's called the Dunning Kruger thought process. Now let me read out a bit of research on this. So first of all, what happens when you start something? You basically saying, I know everything about this. Sweet. I've got this. Confidence is through the roof, as you can see. And then as things start to come in and you realize how things work, the U shape starts forming. And then you start getting, it's more complicated than I thought. I'll never understand this. And that's when you're right at the bottom. Then it's starting to make sense. And then it's, trust me, it's complicated. And that's the kind of last section of it. So it's a U shape. So what is it? So obviously you're confident at the start. You think you're competent. And then obviously it starts to. And then now in trading, you have to remember that this effect is caused by the kind of beginner's luck kind of thing that everybody gets. And then you start finding out things about the market, and then you start finding things about strategies, and then you might find a mentor when you're at the bottom, and then you find your way. And if you look at the trader's journey, it's very similar. Obviously, for you guys that are on the podcast, the trader's journey is a U shape, but it's more squared off. And obviously, we can see the comparison between the two charts. So, the Dunning Kruger effect is a type of cognitive bias in which people believe that they are smarter and more capable than they really are. Essentially, low ability people do not possess the skills needed to recognize their own incompetence, and the combination of poor self-awareness and low cognitive ability leads them to overestimate their own capabilities. Now, how this links in with trading is obviously at the start. Like I said, beginner's luck. You think you know what you're doing, and then you find out that actually to make trading work, there's a lot more to it. It's not just about picking up a magic pattern or a strategy or whatever and getting it to work. There's a lot more to it, especially if you want to do it as a career. You have to take it seriously. Now, the term lends a scientific name and an explanation to a problem that many people immediately recognize, but fools are blinded to their own foolishness. As Charles Darwin wrote in his book, The Decent Man, ignorance more frequently begets confidence that does knowledge. So, an overview of it is basically a bit of a phenomenon, let's say. And it's something that we've all experienced in our real life. And knowing this is very important in your trading. You need to know this to be able to be successful, in my opinion, because if you don't realize what you're doing, and I think we all know these traders that just throw good money after bad money, and just keep trying the market. And they never actually sat down and looked and thought, what do I actually want from this? What do I actually want to do? So, in many cases, incompetence does not leave people disorientated or perplexed. But incompetence can also lead people to kind of believe that they're doing it correctly because they've never learned the right way. So they think they're being competent. They don't realize they're being incompetent. And because it does not kind of leave people in that disoriented state where they're not sure what they're doing, they're not really pivoting like in the trader's journey and drifting. It's more of a thing where people are just blinded to their own blocks of in their own psychology kind of thing. It's quite deep. So what causes the Dunning-Kruger effect? Now, I think one of the first things is the lack of education within trading, or the lack of serious education. There's a lot of charlatans in this game A lot of them indeed, a hell of a lot. I'll tell you that for free. There's so many charlatans in this game, and it is just part of the game. I understand it, but I think the lack of control around the education space in trading leads people to think, sweet, I've watched the video, I've got this, let's do it. And this is the reason why people end up being that statistic of 95%. This is why, because they pick up a video, they think, sweet, I've got it. Just like the guy said in the video, brought stock where Lambo, you know, that kind of thing. And then I think that you've also got the 90-90-90 effects. The 90% of traders lose 90% of the money in 90 days. Now, obviously, that's not a solid statistic, but it is kind of what happens. And I think that's because people are at the top of the stage of the Dunning Kruger effect, and they're not realizing that they're there. And then they'll go off and they're slag trading off afterwards, after they've given up, you know? But also, what plays a big part in the Dunning Kruger effect is emotions. You need to have your emotions in check. You need to know what you want out of trading. You need to know what you want to do with trading, and you need to know how to control yourself when trading. And having a good plan is that, but also what links with that is expectations, is what you think you're going to get out of trading. Now, a lot of people think it's fast money, it's this, it's this, it's this. Confidence goes up. Dunning Kruger effect. It's widely so it literally covers the world of trading, and I think this is the reason why I wanted to bring it on the podcast, because it's such an important thing, and I've realized I've been there myself, and sometimes a lot of people want to get on the Instagram, they want to go on YouTube, they want to share about it, look at this, look at this, look at this, and they lose the sense of what they're doing. They lose the sense of their goal. They don't realize where they are. They get lost in the trading world, and a lot of communities can do this to people because the community is very good in itself, and I think that can cause people to get overconfidence by seeing results, by seeing wins, by seeing other people, and it's just like a roll-on effect that a lot of these things just get in, and it just keeps rolling, rolling, rolling until you kind of break the cycle. Now, another thing that I bring up, which I think adds to the Dunning-Kruger effect, is not having a plan. You need a plan, right? I have a trading plan. I don't just have a trading plan, I have a whole plan of what I want to do over the years where I'm trading, over the days when I'm trading, what I'm going to do, what I'm going to see, what I'm going to, exactly what my plan is. And having a plan is good because I literally have, say, little cards like this where I will write out the exact thing what I'm going to do for the day, what I'm going to do for the week, and then everything's planned. I know exactly where I need to be. I know how much money I need to make to progress to my next stage, and having this plan helps me not get overconfident. It helps me not end up another statistic, and I know, right, you have to accept and you have to notice that people fail at this. So many people fail at it. So what are you going to do that's different, that's going to make you succeed? One of the things is learning the market, learning the actual market. And sometimes it's good following other people, but sometimes it doesn't work because trading is very personal, and it's so psychological in the sense that I look at a chart and I'm going to see it different to you, So we're going to have different perceptions of that chart, and I think it's important to kind of reel yourself back in and just be quiet for a bit, and don't go telling anybody what you're doing, and just study and really find yourself within trading. Like I said, you need to ask yourself what you want out of it. You need to ask yourself what you want to do with it and what you expect. Your expectations and your dreams and your goals are very important to not become a statistic. So another point that I want to make is what a lot of people get overconfident is ego. Ego is a very big thing in trading. A lot of people want to be the cool guy, the trader. I want the car, I want this. And they don't realize that a lot of graft has to come into that. It's not going to come quickly. And it's a shame that a lot of people get sucked in by stuff they see on YouTube. I've been a victim of this myself in the past. They get sucked in what they see, and then their expectations fall off. You see how it's all linked? Expectations fall off because of their ego. When expectations fall off, dreams fall off, goals fall off. And then their plan falls off. And then what comes in with the plan as well is testing that plan is important. Testing it. Does it work? If you're going to go full time, take a week off work first. See if you can do it. But yeah, ego is a very big part of this because, like I said, ego has a knock-on effect to everything else. You have to control yourself, and you have to make sure you stick with what you're doing. And going back to the plan, by plan, I mean The definition of a plan is you set up entry, stop loss, profit taking, trade management, risk management, money management. That's the basics, what you need to do. And then that is one section of your bigger plan, is what you want to do with trading, what you're trying to achieve doing trading. So back to the Dunning Kruger effect. So lack of education, expectations, ego, and plan. There's some big factors within it. And then also I'm gonna bring up some other things that I know a lot of people do, right? And one of them is starting with too much of low capital. Now, with low capital, you're gonna want to make it grow fast, resulting in you taking too many trades, too high risk with too high leverage. And if you start with low capital, you're gonna have to be okay with the fact that you need to be taking fivers and tenors, $5, $10, whatever, and you're not going to be making big money. 1% of £500 is different to 1% of £5,000. And your expectations, see, it's all linked. Your expectations are going to be gone. And that's going to knock your ego down. It's a whole roll-on effect with this. When I started studying it, it just blew my mind. And I thought, let me do some research and bring it to the podcast. Buying or following signals. This is not going to teach you trading. You think it's going to be easy money. You think that you don't need the time to learn trading. You think that you don't need the time to backtest making a plan. So follow signals. And, how profitable are signals? And you need to ask yourself, if they're really that good, why aren't these people selling them to banks and investment places, institutions? Why? Why are they selling it to you for 80 quid a month? Why aren't they doing it themselves? You've got to ask yourself this question in trading. Why does somebody want to teach you trading for that price when they can trade? Right? And there is people out there that do that because it's a business. You need to look at their business model and think, is it worth them for doing this? One of the guys that I teach, that I learn from, that teaches me, it's viable for him, passive income, comes in nicely, and he's not into mad money. He's not into mad money everywhere, you know what I mean? He's not into that. Nice conservative trader. So indicators overload is another one. People have too many indicators. That affects their biases. That affects their trade plan. Again, all linked with everything else. And my favorite one is something called the shiny object syndrome, which is basically when something's new and cool, and then the effect of it dies off, and then it's not so cool anymore. Again, affecting all the other points. Knocking people down to, I'll never understand this, which is the bottom of the Dunning Kruger effect. Now, when you're at the bottom, you're going to be drifting, you're going to be pivoting, you're going to be going from one thing to another. You're going to be at the bottom of the trader's journey as well. The real journey. This is when the real graft comes in. And I know myself, I've been there, and at the moment, I'm at the point where it's in between. It's complicated than I thought. And trust me, it's complicated, I guess. So I'm on the right track. I know what I'm doing. I'm making money. I just need to keep sticking to my plan. And I'm trying to build a new thing around my trading, which we'll get into that in another video anyway. So imagine you've took time to develop a trading plan. You've tested it and you're running to drawdown. Rather than counting on your experience and expectation that is there, you look for a new shiny method of trading. Oh, you're trying this. You're trying the green method, right? This is the method that you're trying, right? And it's working, it's working, it's working. It doesn't work, you dash it away. Try the pink method. Let's go. Working. Not work. Throw it away. I'm giving up trading. There's no other methods left. Then a guy comes along. Yo, got these methods, man. You're like, sweet. I'll take that one. Try it. Doesn't work. Give up. And this is a whole thing that goes on. And rather than sticking to what you've learned, journaling it, learning from it, building on it, and building a plan out of it, building a strategy will come from that as well. You have to go hard at trading. Now, you might even pick up someone else's strategy. You're not going to pick it up straight away. You need to work out your interpretation of this and then work it for yourself. Rinse and repeat. Never give in chance for the original method, right? Which is working when you tested it. You need to prove its worth, right? Rinse and repeat. Keep going. Never give up that method. Because even if that method doesn't work, you will find out why it doesn't work, and you can develop it into another method. Stop looking for other things. Stop going from course to course, to book to book, to this to this. I know loads of people that do it. Just stop it. I've been in that place myself, and I know it's part of the journey. So you have to do it, I guess. But I'm putting a message out there. People don't need to do that. You don't need to look for the next course. I've done it myself. I've done so much. Books, courses, you name it. I've done so much, and I know none of it's helped me. right? In the sense that what I didn't know already from the first one, I had to work at it, I had to journal it, I had to go hard at it, which is what I've done. And now I'm at the stage now I've got so many things that work, so many strategies that I know that works. I'm trying to build something out of this and build it into my lifestyle, which is my next stage of trading. Now, that's the Dunning Kruger effect. Then. If you guys want to research a little bit more about that, it's a great thing to read upon. It will blow your mind. I'll go into a bit more actually. Let's go into the causes. So, incompetent people tend to overestimate their own skills, fail to recognize the genuine skill and expertise of other people, and fail to recognize their own mistakes and lack of skill. Now, a part of the Dunning Kruger effect is also going too hard at something that then knocks your confidence down, which can have like a reverse Dunning Kruger effect. So you have got the skills and the capabilities, but you believe you don't, your confidence goes down, and your competence goes down, and your incompetence goes up. But really, you have got the skills. So there is a reverse Dunning Kruger effect as well, which gets people that are in trading. And that's because they're going too hard at something. Going. Starts not working. The confidence gets knocked down. Incompetence, like I said, and I've experienced that myself. And it's crazy when you do, because you can do this, and it's not like the people that get Dunning Kruger effect that don't have the cognitive skills to do it. It's not that. It's they need to home in on themselves to realize that they can do it, but they need to build in it. But they can't do it right now. But you can. But you can't right now. You need to build on it. Knock your confidence down. Knock your ego down. Bring yourself down. Step back. Rewind. Start again. And I've done that so many times myself. Let's get into more market. Right, truths about the market. So I'm gonna give a few bits of information now, but then we're gonna get into it into another video. Now, after recently not sleeping so much, and some very good friends of mine and people from the Dream Team, we are now studying how the market really works. The truth about the market, the truth about stocks, how these things actually work. Now, a lot of people learn this and get the Dunning-Kruger because the confidence goes up, incompetence goes up, and they think they know it all. Yeah, sweet, blah 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 blah. Because it is something that blows your mind that much. It's such a rabbit hole to go down that you have to reel it in and strip it back. So what I've done recently, I've reeled all of my trading back in after watching some videos and reading some books and reading some research on the market, and I thought, Jesus, this is a bit different to what I thought. So let me reel this in, and let me start from here. So I reeled it in, and I've recently found out things about the market that's completely blown my mind. So one of them is that banks are not going to put billions and billions of pounds to chance. Just let that sink in if you don't know that. Do you think banks are going to put this much money to chance? Do you reckon they're going to? When the amount of money that they've got is enough to move the market. So why would they put that money in the market and leave it to chance? Logically, they're not going to, are they? What are they going to do then? Well, then they're going to use that money to move the market. Now, banks and financial institutions have legal boundaries. They can't just pump a currency pair or a stock as high as they want. Believe it or not, they do. And the manipulation is different to how it used to be back in the day. It used to be different back in the day. Like the point where a stock would crash and clients would be phoning the phones and they just wouldn't simply just not answer the phone. That's the very basic that they used to do. Pump and dumps, all that kind of stuff. I'll talk about more stuff back in the day when I get somebody on the podcast that's going to talk about it. But the times have changed now, and now what they do now, they have people within companies called liquidity finders. Now these people might be algorithmic coders. They might be there might be an actual person, but what that person's job is or the role is to find liquidity in the market for them to use. Now, one of the most basic ways that they do this is through an IPO. Now, this is one level of kind of corruption, manipulation, whatever you want to call it. That say like a company needs money, what that company can do is borrow money and give somebody shares in return, and then IPO. In that IPO, there's going to be loads of liquidity of people buying and selling, whatever, and then that person can then dump that market and cash in their shares for the investment they give to that company. That's a very simple way that it's done. So that's like on a bigger scale of things. That's like on a that's like the basic way without going into too much detail, but that gives you a feel for what they do, right? So that's one way of kind of gaining money for the company and paying investors back through IPOs. That's why sometimes an IPO, it will commence and the thing will just tank because they're dumping shares. Now, within brokers as well, there are two sets of connections. One of the connections is called the A book, which is direct market access to market makers and liquidity providers, and the B book is basically what's called a swap. Now, this is the person that wants to short 100 shares. This is the person that wants to buy 100 shares, right? And all that's done is a simple swap. That's why some brokers can't borrow you the shares when you're trying to short something, because they don't have the shares. They don't have enough people going in the opposite direction, supposedly. And they don't have no connection to direct market to be able to do that. And it happens a lot in spread betting and CFD trading. So that's one thing that's good to know. So a lot of us as retail traders, we don't have access to liquidity. However, there are small firms and there are big firms, there are massive firms, there are fucking conglomerates. And in order for them to, say, short shares, they need to sell those shares to a buyer. So the market don't just move on its own. Shorting, when shorting came around, it's not just a thing where, you just sell shares that you don't have. We'll go into it in another video, but it's basically, you do kind of own those shares and you kind of get them back at a cheaper price. So imagine that you have, say, a double top, right, or something like that. Some kind of thing that's gonna get a lot of liquidity, right? Let's say a trend line, right? And then that trend line's gonna break, and we all know that above the trend line are gonna be breakout traders and also stops from traders that are trading the range of the trend. Now, what markets can do, and market makers that need to find liquidity, is use that as a tool to trap liquidity and take it. So they're looking to dump 1 million shares, right? For them to sell the shares, they need buyers. So they're going to look for a place to sell, which is where everybody's buying. So if everybody's buying, right, and they need to sell, they'll just take those orders, right, and give them to the market. And everybody's buying them, and they're selling, and the price is going down. This is why a lot of the times the market will go in the opposite direction to what you expect because of this, because of liquidity. And there's so much more to it. This is just me going into it a little bit. Obviously, for you guys that are interested, you can message me on Instagram, doing a free webinar about all this stuff. And also, it's completely free, but then I'm looking at getting speakers in and trading psychologists and all this stuff. And the idea is that it's crowdsourced to pay them. Everything's transparent, done through fucking some website or something like that. And it's going to be saying it's going to cost £300 to get a speaker in. We all chip in £3 or whatever, I don't want loads of people in there. I want it to keep it quite intimate so everyone's got a chance to ask a question. But that's the little idea that I've got. I've got quite a few names signed up for it. So if you are interested in it, just drop me a message on Instagram. So knowing these things about the market completely has changed everything for me. And what I've gone into now is following that liquidity and following those orders and really understanding which way the market's going by studying market structure, things like Wyckoff and many different concepts. So for me, my trading has now changed in the way that every trade that I take has a reason behind it. Every move that I kind of record in the market has a reason. And if it does the opposite to what I expect, there's a reason for that. So I'm just building on this knowledge at the moment. And some of the risk to reward of these trades that me and the guys have been taking is absolutely crazy. Normal one-to-ones, like Nah, not even 1 to 2s, not even 1 to 3s. We're catching massive risk to reward because our minds have been opened. I keep putting Matrix memes on my Instagram, um, which is just a bit of a joke, but it's the truth. Like, our eyes have been opened up to the truth about the market, to what is actually going on in the market. And I'll tell you something now, this information is not put on the internet very widely. It's not. The brokers want to give you the indicators, they want to give you the volume, the RSI, and all this. They want to give you trend lines because they want your liquidity. They want your liquidity. That's what they want. And they're not really after retail traders. I get that. But you just end up being part of the liquidity. But there are big sharks and whales that do trade these normal kind of fundamental technical ways which people learn off Google and all this. And you really think if that's the way to trade, you really think that there'd be so many more successful traders. And I think this is one of the reasons why so many people fail at trading. The retail methods do work and you can make them successful, but you need to have a really good psychological status to be able to make them work. Whereas the kind of way that I'm learning to trade now and trading now, it's more mechanical. And if my stop is hit, I don't really care because I know there's other opportunities. My whole psychology has changed, which is what I'm going to be bringing into this channel going forward. Really, we're going to be really pushing this stuff, but at the same time, the stuff that I'm learning, like I said, I'm still learning it, so I'm not gonna be really talking about it too much on the channel until I've kind of got myself up to speed. But this is a method that I've kind of found consistency straight away with as well, because the method's that mechanical that it either works or it doesn't, but it's just trying to fit it around my lifestyle at the moment. But that's it from me anyway today. I hope you guys really enjoyed this, and like I said, I've done a bit of research to show you guys this, and study the Dunning Kruger effect. It's absolutely amazing. And if you're struggling in trading, just study it and realize and ask yourself, are you in that graph? Are you part of that statistic? Because it's important to know, because I tell you, that for me was a big game changer. It really was. But anyway, peace out everybody, and I'll see you in the next one.